Welcome to the third session of the first E-Mission Silicon Valley, organized by the International Commission of the Chilean Construction Chamber. I'm Gabriela Villalobos, and today I'm joined by Carlos Vascu from Empresas Vasco. Thank you so much for joining us today.
Thank you, Gabriela, and hello, everybody. A pleasure to be here sharing this interesting mission.
Yeah, we wanted to thank everybody who's been joining us from Zoom and also through YouTube. Today we'll have a conversation panel with two big venture capitalists. One is Anil from Noma Capital, Anil Radiv, managing partner at Soma Capital, and Bernardo Cordero, co-founder of Flat.mx, and also one of the co-founders of Linio.com, a big marketplace. We would like to encourage you to send us your question through the Zoom chat or let us know if you want to make some questions. So let us start with the conversation panel. Anil, can you hear us?
Yes.
Thank you so much for joining us today. Also, Bernardo, can you hear us right now? There you are.
Yes, perfectly.
So for starters, we wanted to know a little bit more about your background. Bernardo, can you please tell us a little bit more about yourself?
Sure. I've been in the tech space and startup space for many years now. Part of the team that co-founded Linio back in 2012. So I was there for about 5 years. Also been very active in the local ecosystem in Mexico as a founder of the local e-commerce association there. Then after that, I launched Strategy, which is an early stage fund where we invested in several fintech companies. And last year with Victor, my co-founder, we launched Flat, basically focused on buying and selling residential properties online with technology.
Thank you for that. Anil, what about you?
Yeah, it's super great to be here. Thank you so much for having us, and really excited to share more about what we're building and try to create as much value as possible for you guys. And happy to be connected with everyone here. I grew up in the San Francisco Bay Area. I went to school on the East Coast and spent the next 10 years building consumer startups. I built a anonymous social network, a video analytics company, daily deal site similar to Groupon, local recommendation engine, location sharing apps. So about a 10-year stretch of building different consumer products. Have been investing with Soma Capital, the venture capital firm in San Francisco that I started over the last 6 years. And our vision was to invest in software to automate the economy across any sector or geography. And in 6 years now, we've invested early. We're often one of the very first investors in startups worth close to 40 billion combined value. Some of those companies include Rippling, Alto Pharmacy, which is a digital pharmacy, Ironclad, which is software to digitize contracting, Human Interest, which is software for retirement plans. We invest in some great teams in Latam like Rappi. Excited to be investors with Bernardo and Flat, Covey, Beak, which is a podcasting platform, and some startups in other emerging markets like India. We were first investor in Razorpay, which is now $1 billion fintech company in Southeast Asia. And we have some unique superpowers. So I get to leverage the network of my family. My father is an immigrant from India, came to the US with nothing, ended up building a software company called Tibco, T-I-B-C-O, which digitized Wall Street in the 90s, scaled Tibco software to power back-end infrastructure of many Fortune 500 companies, multi-billion revenue business, which he sold in 2014 to Vista Private Equity for 4.3 billion. My father was also an early investor and mentor to some all-time great tech companies like Google, Yahoo, Salesforce, eBay, mentored Steve Jobs when Steve was building Next operating system. Larry and Sergey of Google met the first investors at my dad's Christmas party. So it's sort of all I've ever known, grew up fully immersed in Silicon Valley, and I'm trying to invest early in the next generation of incredible software teams that are trying to automate the world and get the right resource to the right person at the right time, reduce friction, and help push humanity forward.
Thank you for that, Anil. So let me start with a very broad question. How do you do your selection process when you first invest in a company? How do you analyze and discover which companies will make it and which ones won't? Anil, let me start with you because you were one of the first investors in Rappi, which is one of the only unicorns in Latin America.
Yeah, so growing up in Silicon Valley, which often sees many of the strongest teams first, many of the strongest technology teams often come to Silicon Valley first for access to the most experienced technology investors. And so by growing up fully immersed in this environment, being longtime family friends for decades with founding partners of the Sequoia, Benchmark, Excels of the world that have invested early in some of the all-time great technology companies that we know, that we all know today. One thing I realized was that there's kind of two ways to get access to the best teams. Number one, if you have a legendary brand, if you're like a Sequoia or you're Mark Zuckerberg, no one will say no to you. You can kind of get access to invest in any great team. Or number two, if you can come in early enough before the best teams kind of get snatched up by a few really dominant players, then you can have a shot. And so I have a pretty specific strategy. Number one, I use the kind of family brand for enterprise software experience to convince founders that we have the network and decades of experience to help early all the way to later stage. For example, I've helped early stage founders go directly to Mark Benioff for Salesforce partnership, or to CEOs of banks, or CEOs of large tech companies. So we have the network and the brand. But number two is we look closely to an accelerator program called Y Combinator, which is basically like a camp for startups. And over 20,000 companies from all over the world apply to get in. They only accept 200. And out of those 200, we look closely at some of the strongest teams. And there's kind of 5 things that we look for these companies that get to Y Combinator. So Y Combinator started 15 years ago, and over 160 billion worth of startups have been built out of this program. And some of the founders there and partners have been longtime friends for 15 years. So I was kind of lucky with the network that I had. But it's where Airbnb started. It's where Dropbox started. It's where Rappi started. It's where Stripe and Instacart and Optimizely started. And so we basically meet the companies very early before any big kind of big name venture firms. And we look for 5 things. We look for technical brilliance. So we like software teams that can move very quickly and they can keep trying new things and pivot if they need to. So we're sort of not betting on the specific product that they have today, but the ability to keep building new products and keep innovating quickly. Number 2 is history of excellence and execution. They move very fast. Number 3 is ability to sell and tell a very compelling story and communicate well. We try to imagine, can they lead a 2-person team, and can they also lead someday a 10,000 person team, CEO of a multi-billion-dollar public company. Number 4, we look for relentless determination and optimism, because many things will fail over the long term, and they have to have a view of, no, there has to be a way to get it done, that there has to be a way. So they have to be optimistic and very determined. Number 5, lastly, we look for high integrity, good people that we want to work with. And so that's our kind of a simple formula.
What about you, Bernardo, in Strategy Venture?
Yeah, so as I mentioned, I think I've been on a bit of both sides, more operating on the Linio side, then in strategy when I was investing, and then back to operating with Flat. I think for us in strategy, it was being close to the talent. When we launched Linio back in 2012, there's very few tech companies in Latin America, or at least getting to the size we're getting at. And that allowed us to be very close to the talent. That allowed us to be very close to the people that were building these new companies, being founders for the first time. So I think our thesis there was really being close to that talent, getting to know them, understanding who were the best people going after these opportunities that we saw clearly in Mexico and in Latin America. One of the things that we saw was that since we are some years behind what we're seeing in the US and Europe and some other markets, you kind of have a window of opportunity to say there's a lot of businesses that can still be built out in Latin America, that can still be scaled, that you can see success somewhere else in the world, and you could bring them into our markets. The model will never end up exactly the same, right? Because our country is different. Every country is different. Even in Latin America, there's differences between one country and another. But at least you know, and at least you see some opportunities that haven't been built yet. So for us, it was how do we find the best talent that are going after some of these. In terms of talent, for me, I mean, we had before getting into entrepreneurship, and when we were looking at it, one of the first things you would hear from VCs always was, "Hey, we bet on the team," right? And you would hear that, and you would kind of go back and you would say, "Yeah, I believe it, but if they have a great idea, it's going to work." But once you start to operate, you start to realize that whatever you start with, it's so different from what you end up with that unless you have the best team going after these ideas, there's no way they're going to be able to pivot or change and be able to be dynamic throughout the whole process of a startup to be successful. So once I got the strategy, was without a doubt, number one was how do we find the best team that even though they might be working on the best idea or not, they will be able to get through any period of the company.
Yeah, Bernardo, you just mentioned that there are a number of very interesting startups in Latin America. And we actually have a question about that from Roberto Puga, who is asking about what elements do you think are missing in the Latin American startup ecosystem? Because we do have a few startups, but there's still really few.
Yeah,
maybe Anil or Bernardo, yeah, you can start with it.
Sure. So I can give a quick comment on it. So from my perspective, there's definitely not the size and breadth of what you would see in the US and other markets, but we're way ahead of where we were before. No? As I said, in 2012, you could count on one hand how many startups were relatively successful in the ecosystem. In order to get the ecosystem going, you have to have a lot of different things, right? The first thing is talent. There's actually, for example, a study done out of the people that worked in Lino, there's around 75 different founders. And that's one of those companies like Mercado Libre, for example, that has been an amazing company at creating talent in the region. There's Despegar, there's several companies in Brazil that have been those creators of founders. And I think that's the first thing. And then the next one is access to capital. When we started some of these businesses, funds were going on their first funds, right? There were small funds having raised their first funds locally, and now we're seeing that they're getting to that second, third, and in some cases even their fourth fund for the local VCs. And once they're getting to that level, they have much bigger funds, they have much more experience in what to invest in. So that combination of more experienced founders that had worked before in tech companies, now they're going at it on their own, plus investors that are also on their second and third funds. I think that's a great combination. That's what we're starting to see. And then you add international investors, like what we're seeing with Soma Capital, interested in this region. And those are great partners for those local funds. And all of a sudden you have great combinations between local funds that see the market, plus international funds that understand what it's like to be successful in Silicon Valley, are much better connected to the ecosystem and in a much bigger ecosystem than ours. So for me, it's that, and we're starting to see some great cases. And for example, we just had an announcement today from Kavak on being the first unicorn in Mexico. And those type of success stories will only bring more capital and will only bring more entrepreneurs.
Thank you, Bernardo. Anil, do you want to comment on that?
Yeah, I think just to give maybe my own glimpse of how I thought about Latam. So when I met Rappi when they first started 5.5 years ago, they had a vision to build an Instacart-like product in Latam and get the right produce or the right resources to the right people at the right time. And the team was phenomenal. And they had a strong ecosystem from Y Combinator to kind of look at the DoorDash model, to look at the Instacart model, and get guidance to build that out quickly. And we saw Latam as an incredible, close to 1 billion people market and over 7 trillion GDP. And so we were excited to be able to invest and help use the playbook from other Y Combinator US companies to give the guidance and the learnings. And I think now, to touch on what Bernardo was saying, there's just from the Rappi story alone, and there's many other examples, but just from this one story that I can speak to from personal experience, there's a lot of network effects around that, where investors like myself that have done well investing in Rappi are now looking at other opportunities. They're looking at other ways to take a playbook from proven US models and replicate it in Latam. For example, we did one similar to Brex of Latam. And what happens at Y Combinator is billion-dollar companies are being built in less than 2 years by just signing up all their friends in the network, and then they grow together. So Ironclad, which is digitizing contracting, they just sign up Airbnb, Dropbox, Stripe, Instacart. They sign up all the alumni in the network, and they get to scale faster than ever before. And just out of Rappi, we've seen a few of their former colleagues building successful new companies. One we invested in called Laika is similar to Chewy. So it's a pet resource delivery platform. There's another one that we looked closely at called Frubana that helps restaurants source fresh produce. So there's just from one successful company, there's investors that are more excited and motivated to deploy more capital, that are excited to take learnings from proven business models and apply them from US to Latam. There's founders that have been successful that break off to start their own companies. And then as the overall network of value grows, new founders can sign up all their friends as their first customers, and everyone can grow together. So we're seeing incredible network effects with more stories like Rappi. So I think it will just take more time. And as the value of all these companies grows overall, and as there's more knowledge shared, and people can sign up one another as first customers, and just be really open about sharing talent and insights from later stage to earlier stage companies. And as there's more Rappis and employees break off and start their own companies and then sign up all their friends' companies in the network, the overall value will continue to grow.
Anil and Bernardo, first of all, a pleasure, and thanks for the opportunity to be talking to you. Today we're sharing this talk with members of the construction and real estate industry, and actually we're talking from the Chilean Chamber of Construction. We know that the construction industry is, according to a McKinsey study, is the industry that invests less in digitalization, and we invest no much money as companies in innovation. But at the same time, we have very low rates of productivity, and it's recognized that the industry is changing fast. According to your experience and putting together some industries and startups or new ideas or new capitals or investors in this, and we have a gap in between needs of the industry or the companies and what new companies can offer. How do you identify, or where do you put the eye, or where do you seek the opportunities in I don't know, different industries? But I know at least Bernardo, you're related to a real estate investor company. What can you talk about or move your views about venture capitals in the construction and real estate industry that is very broad, atomized, and it's not concentrated as let's say, for example, in aerospace companies are few ones, and best innovation and investment can be. Can you give us a broad view on how you invest, or what to recognize in this construction and real estate industry, or any experience?
Yeah, maybe I can start with that one. And for me, it was before starting Flat, one of the biggest things was mapping out the problems that we saw in the industry and what were some of the biggest challenges that we felt that we could solve. As you know, the real estate industry, it's one of the biggest verticals in our region and in the world. And for us, once we started to review what was going on, one of the biggest problems we saw was that we saw a market that had very little liquidity. We saw a market with very little data and very little technology. And that took us to say, what problem can we solve today, and what problem can we try to go after with technology? And what we saw specifically in Mexico, and that we think translates into other countries as well, and also looking at what was going on in the US and Europe, was that the residential market was simply not working, right? In Mexico, it can take you anywhere from a year and a half to sell your apartment, to sell your home. And there's been some money put into technology. There's been listing sites that have existed for 15, 20 years in the country. But if you're a seller of your home, it's just impossible to sell, right? The process is broken. Anywhere from the beginning of where do I price my home at? How do I get it into the right sales channels? How do I work with brokers or try to sell directly? How does the closing process work with the notaries, with the government, et cetera? And for us, that was the biggest problem, right? If you have an industry where simply you can't transact, or it's very complicated to transact, and that hasn't been touched by technology, for us, that was very interesting. And that's why we started with Flat. So you can imagine today a seller that's been trying to sell their home for a year, and all of a sudden we come by and we say, all you have to do is give us your information of your home, and we can give you an automized offer on how much we would pay for your home today. That's a game changer, right? It changes the industry dramatically, because now something that was illiquid, now today I can transact, and I can make a transaction tomorrow in the same way that I can sell a laptop, or I can sell any of my other assets. And for us, that's why it was interesting. As you mentioned, I would say it's a sector that there hasn't been enough investment in the past. But at the same time, we also see the traditional players as partners, right? We see this as such a big market that we have to know how to partner with the players that have been in the market for 30, 40, 50 years. To give you some examples of things that we can do. So for example, we're working with some of the largest residential construction companies in the country. And what we do with them is they have customers that come to them that want to buy a home, and they can't buy it because they haven't sold their previous home. So what we do with that construction company is we'll go in, we'll make immediate offers to those customers so we can buy their previous home, and now they can use that liquidity to buy a new home with them. So that's just one example of many ways that technology companies, startups like us, could start to partner with bigger players that have been in the industry for a long time, and we can grow together.
Thank you for that, Bernardo. And we have another speaker joining us in this conversation, Jonah Greenberger, he's co-founder of Bright, which is a company who's helping make solar energy accessible in LATAM, and his company is also part of the portfolio of Soma Capital. Thank you so much for joining us today, Jonah.
Yeah, great to meet you all.
So we have another question from Ignacio Troncoso. Ignacio.
Thank you, Gabriela. Thank you all for being here, Anil, Bernardo, and now Joan. I have a question about startups and investment. Most of the examples are in the consumer area, but we have a couple of examples here at the chamber that we try to develop new technology to sell to companies, more business-to-business products that requires a different journey, a different growing pattern, different investment. And I wonder if you could elaborate and give some examples of that and recommendations on that area.
Yeah, so
Yeah.
I have a couple quick examples. So from Strategy, we invested in 2 companies that sell B2B, not specifically in the construction sector, but just as examples as something that is different from the consumer space. So we invested in one company, for example, that's called Worky. This is an HR platform that is sold to the heads of HR of the different HR different companies. And for us, that was a very interesting business, right? Because it's a product that takes a very different sales cycle than your traditional e-commerce company where you could sell to the end customer. This is somewhere where you have to develop the right technology. You have to know how to get close to all the different companies in your region and to grow slowly. But once you get that growth, you get to an inflection point where you start to see much faster growth in the future. The other one we invested in, which is very interesting as well, is called Belvo. So Belvo is in the fintech space. And basically what they do is that they connect all the information of all the different financial players, right? So they connect the information of all the different banks, of all the different financial institutions. And then any company that wants to access this information, instead of connecting to each one of those financial institutions, they just connect to Belvo. But at the end of the day, that's a B2B sell as well, where they have to sell to each one of these companies that want to interact with the software. So we have seen many examples of these B2B sales companies that have started to grow and have started to become much more interesting in Latin America, right? So I think at the beginning, we saw a lot of consumer companies. It seemed to be more sexy for the entrepreneurs. But when we actually see the results and we actually see some of the success stories, we're starting to see a lot more of these companies over the last few years.
I would like to sorry.
I was just going to say, so I think I touched on a few of these, but ones in B2B software startups we've backed that have grown, where there were a couple people and an idea and now have emerged to 300 million to billion-dollar valuations. One, as mentioned, is called Ironclad. So it's kind of similar to DocuSign, but for bigger businesses. They manage contract signing, tracking, who's signing which documents. They allow it to all happen online and get data around how your contract is evolving. Another one called Lattice, which helps employees in a company set goals and track their personal growth and personal achievements and work their way up the ladder in a bigger company. In the similar vein, one called Torch, that's mentorship for employees, that is kind of like personal coaching for companies. That's doing phenomenal as well. Another called Rippling, that automates streamlines the whole HR process of onboarding new employees and getting the right access, the right permissions to the right employee at the right time, getting them set up efficiently. Another kind of in the same vein called Deal, that is also doing phenomenal. They just raised their Series B at over 200 million valuation. And they just started a year and a half ago, is automating payroll for remote teams. So in the new world, a lot of teams are working remotely. And so there's a lot of services, B2B software services emerging around automating workflows and allowing for teams that are working from home to operate more efficiently in terms of the way that they get paid, the way that they can do their benefits and taxes, the way that they can collaborate online together, sharing documents together. So we did a work collaboration tool called Coda for companies to collaborate in documents. Human interest is mentioned, software for HR. We're excited about B2B in the logistics space. We've done a couple autonomous companies, one that's autonomous freight delivery called Embark Trucks, that has California to Florida self-driving truck routes for huge retailers. We did, what else can I mention? One called Mothership, that's a last mile logistics software, was a Series B company led by Benchmark. We were first investors there. So we think that the demand is exploding with the Amazonization of the world, that there's not enough trucks and roads and infrastructure to provide for just the explosion of demand. And even now, and there's tailwinds in demand from the new work from home behaviors. So we're excited to see how software can help automate things more than ever before, as we're kind of projected 5 years into the future where people are forced to use more software and technology in these new work from home behaviors.
Thank you for that.
I would like to talk about failure. We have a question from Marcelo Ringeling. If you can talk about your biggest failures and what can you say about the learning of that? Here in Chile, we're not happy with failures, and the construction industry and in real estate industry is a conservative one. What can you say on examples you can give us and the learnings of failure?
So I can speak quickly to that, and then I'm sure Bernardo and Jonah can add some color on their own journeys as investors and founders. But for me, so I tried to build startups for 10 years and decided that I'm not the best operator. And since then have really gotten sustained progress on the investor side, investing early in 6 unicorns now, companies valued $1 billion or larger, 13 valued $300 million or larger. I think we've been arguably one of the top early stage funds in the world in terms of number of hits that we've had with this close relationship with Y Combinator that we have. Thanks to the network they've built, thanks to the brand we've been able to use to get access to great deals. But as a founder, I would say that getting product market fit, I found, was extremely difficult. Building something that people love, that is 10x better than anything else out there, that they want to share with all their friends, that spreads organically, that has good retention, that has strong retention and good unit economics. So for every dollar you spend to get a customer, you get back more than that as a return. So I'd say the learning was that building a company is really hard. It often involves luck and timing. So I was building a social influencer app to share location, and given the family were also owners of an NBA basketball team called Sacramento Kings, and connected to many of the top athletes in the world and artists that play at the arena. So we were getting all these influencers, celebrities using the location sharing app, and still struggled to get sustained traction. New visitors would only come when a celebrity would post something, but then it didn't have sustained organic growth from new people getting on and using. And so ended up stopped working on it, started investing. My co-founder kept trying and trying and trying. And it's now called community.com. And you can text with your favorite influencers. It's like a $500 million company. It's one of the fastest growing like social influencer companies of all time. And so I'd say on the founder side, the main learning was that you just have to be really resilient. You have to keep trying. You have to have a great talent so that it's a well-oiled machine that can keep iterating quickly and trying new products. And you have to be insanely determined, and that it's often just timing is everything. And so you don't know often when to keep trying and when to pivot to something else. And then I'd say on the investor side, as Bernardo was alluding to, I think it's all about talent and network and finding a way to have a seat at the table early stage for the best teams so that you at least have a look at everything. And one thing someone pointed out to me as an investor, and why it's so useful to have access to a lot of great talent and see a lot of high quality deals, is that when you're in other parts of the world where you might not have as great access, you don't have many examples of saying no to things where they then go on to build something great. Whereas in Silicon Valley, we've all said no to many companies that have gone on to build really successful, incredible businesses. Most people's no list of companies that then went on to do something really great is 10 times more impressive than the list of yeses where those companies actually turned out to be really great. And so when you're in other parts of the world where you don't have, sometimes you might not have, or even you're in Silicon Valley, but you don't have access to really great talent and network, you say no a lot and you're usually correct, versus when you say no a lot and you have a lot of misses, it kind of forces you to really open up your mind and ask, what if, like, is there a way that this could really work? And as Bernardo was saying too, just really focus in on team, because the biggest ideas, the biggest outlier ideas often seem small and silly in the initial stages. Snapchat was like disappearing pictures seemed silly. Airbnb, the market didn't even exist of renting out your home to strangers. That, you know, there was no such thing. So often the best ideas are not like, you know, Uber of walking your dogs or Airbnb of, you know, dinner parties. It's often things that you never would have thought of that seem silly, or the market might not even exist yet. So, so I think that's, you know, in a final statement, on the investor side, you're learning a lot every time you say no and something ends up being really successful. You're kind of always reevaluating your criteria and you know, always kind of making sure to focus on team first and foremost, that the strongest teams will often find a way long run to do something really great.
Yeah. Bernardo, do you want to comment on that?
Sure. So on my end, I think when you look at successful founders, it's hard to find examples of a successful founder not being very good, right? There's a lot of, as Anil mentioned, there's a lot of luck. There's a lot of things in terms of timing. There's a lot of things that have to come together, but you have to have an amazing founder to ride that wave. On the other end of the spectrum, there's a lot of amazing founders that have not gotten those different parts or different elements that you need to be successful perfectly right? You had an amazing founder that maybe the timing was wrong, or you had an amazing founder that maybe competition got at some point too complicated for them to be able to grow the business. So there's tons of examples of amazing founders that simply weren't able to put those pieces together. And those are the ones that when they're going at it for a second and third time, that have lived through some of those tough experiences, that know what to look for and know what to be careful with, will be extremely successful. And I think that's something that Silicon Valley and investors have gotten really, really right over the last several years. And it's how do we back those founders that have had some hiccups, that have not been successful, but that we feel are amazing and that they will get it on their next try. And for me, I think that's the biggest learning in terms of failure. No, we have to accept that failure is not 100% attributable to that person, but in many times circumstance.
Thank you. Joanna, do you have a story about failure and the lessons you've learned that you would like to share with us?
Yeah, we all have stories of failure. So I just adding on to Bernardo's point, I would say one of my favorite phrases is a great founder is like a heat-seeking missile, always looking for opportunity and always adjusting. And so I think one of my biggest failures is in the early days, you have to just build so quickly because you need to learn and test with customers. And I would say at some point, the company moved from me building to me actually hiring people to build, and then making sure I was enabling them and I had the right people in the right seats. And I think the biggest thing I struggled with was making that transition. I think this is actually where a lot of CEOs get fired, actually, because they can't make that transition. And so for a long time, I was still trying to build, trying to be involved in all of the details. And I wasn't enabling my team. They didn't feel empowered to make decisions. And so morale was really low. And I think there was a point where the company almost failed because of that, because I wasn't willing to let go. And I didn't realize that my job had changed. So that was probably a big failure that I think, thank God, we figured out. And for those that don't have background, we're the largest rooftop solar company in Mexico right now. So around 70 people. And that challenge, I think, hit at maybe like 40 or 50 people is when that really hurt. And that was hard, but we got through it.
Thank you for that.
Yeah, maybe to Jonah or any of the others who are here with us. I think I understand, Jonah, you come from Think Bright, and investing in solar energy in Latin America. I don't know if in Mexico or Southern as well. Talking about the energy industry, we know that the whole world is making a big change from fossils to solar or electric energy, or using electric sources. Is it, and coming from the question of failures, when is the proper moment to go in to invest in, for example, big changes as digitalization, industrialization, or solar or energies? Is a timing going in a proper moment, not too early or not too late. Can you talk about the timing and how who do you equilibrar or
Balance?
to balance when is the proper moment to go in?
Yeah, I think timing is everything. There's a lot of companies. I mean, I don't know if you remember, what was it? Palm Pilot basically came out with the iPhone, but just like, 5 years too early, and the market wasn't there. So timing is everything. I think probably the simplest answer is build something for when the future needs it, 5 to 10 years out. And so you kind of want to live in the future, but not too far in the future, because you might miss the market opportunity. Usually I'd say a lot of startups, I mean, it depends, but a lot of startups end up getting to some level of maturity in 5 to 10 years. And so, I'm curious what Anil and Bernardo think, but I would say probably build for 5 to 10 years out when you think there will be a meaningful market there.
Bernardo?
Yeah, so very, very similar. No, timing is complicated, right? Because it depends a lot industry by industry. There's some industries where being a first mover, it's very important. There's other industries where the first movers haven't been very successful, and it's better to learn off of what they've done and come in later. So it's a tough question because it depends on each industry where you want to be in terms on how fast you want to move on the opportunities. But the market usually has to be ready, right? And I think we lived through some of it in Linio, where we had to educate the customers on how to buy online, and we had to pay customers to buy online for the first time. And that's really difficult, right? And that's really hard. And we saw a lot of smaller companies starting in e-commerce when we were starting off on Linio, that they started to do specific verticals, right? And they would start with, selling things for kids and babies. Another site would start selling things for pets. And we were barely just getting started on general e-commerce. And all of these smaller companies ended up dying off. And in the last couple of years, is probably the perfect timing for those companies to grow and to start going, because customers are already ready to purchase online. So I think for every industry, I think you have to look at what are the factors for success. Are the customers ready to start adopting this? And that's when you start to take action.
Thank you, Bernardo.
And I think it underscores the emphasis of startups and entrepreneurship, because it's very hard for a big company, the innovator's dilemma. It's very hard for a bigger company to innovate. It's like taking a huge cruise ship and trying to put a little tiny rudder on it and move the direction like that. Whereas a startup is like a small sailboat that can quickly move in different directions. And my longtime friend, who was at Y Combinator, I met him when he applied to get in. He had a small startup. His idea was to put your whole operating system in the cloud and be able to upload all your documents. And he called it Dropbox. And he got into Y Combinator, and everyone was basically pressuring him and saying, aren't you worried about if this actually works and you take off, aren't you worried about like Google copying you? And what he would say, which I thought was really interesting, was that he had a collection of brilliant MIT people, his friends from school, that he was getting on board, who were really hungry and ambitious and had a lot of ownership in this project. And what he said was that Google might have a lot more smarter people overall, but they're working on so many different things and they have so many other things to worry about. He's putting his A+ team on the field. When they do eventually get to trying to build the same thing, it's going to be one of like 100 projects, and it's going to be like their B team or their C team on the field against their A+ team on the field. And so I think it underscores, and he ultimately, he was right. They built an incredible product, and Google ended up copying them, but they built a very user-friendly feature set, and they've been able to be lean and iterate and build a multi-billion-dollar company and launch a whole set of new products and go more enterprise route. So I think it's, the question just underscores the importance of finding ways to stay tapped into the kind of youngest, hungriest up and coming talent, that is going to be putting their A+ team on the field, that's going to lead the way for the next set of innovation, and find ways to invest in that, to acquire that, to incorporate it into into bigger companies.
Thank you for that, Anil. So one of the most important things that an entrepreneur, or a successful entrepreneur, has to have is a good sales pitch. And we wanted to ask you, Jonah and Bernardo, to give us a pitch about your companies, I don't know, maybe in 3 minutes, to have the experience that I'm sure Anil has every day to hear a sales pitch from a successful company. Jonah, maybe you want to start with that?
Yeah, I mean, for us, we're affordable rooftop solar for the developing world, and we're backed by the #1 US company, as well as Tesla, the #1 US company in solar as well. So, I mean, you try to keep it as short as possible. That's basically what we do. And using analogies is really helpful as well. So, if you're in the US, we're Sunrun for the developing country. And that's our pitch.
That's good. Bernardo.
Yeah, so from our end, we buy homes instantly, we fix them up, and we sell them. So basically, as mentioned before, taking a process that might take a seller anywhere from a year and a half, and condensing that into a matter of days. So really creating a product that simply is unmatchable for sellers of residential real estate. We then remodel those, put back into the market a product that also has very little competition, and now buyers can buy with legal certainty, with confidence, used inventory that is now 100% remodeled. We're also backed by some of the best VC funds, the top fund locally in Mexico, amazing international funds like Soma Capital. We have the founder of Open Door, which is a similar business model in the US, worth several $1 billion, and they just announced that they were going public as investors in Flat. So we have the opportunity to change radically how real estate is bought and sold in Mexico.
Thank you. So our last question is about talent. You three have talked about talent, how important it is to find the good ideas, but how do you select the right people to execute them?
I think the framework we use actually is think about the level of information you can get and try to get as much information as possible. So best possible way is having worked with someone before, really optimize for finding the best people that you've already worked with and getting them to join your company. Second best is references. Find people who have worked with your friends or people at your company and were the most talented people they've worked with. That is the second best sign. The third best sign, I would say, is giving candidates an exercise and then judging how they do on that exercise, because you actually see how they get to work together. And ideally, if you can make that exercise, multiple days or multiple months, hard to do, but you're going to learn a lot about working with someone by doing that. I'd say the third most or the fourth best way to get information on someone is the interview. You can actually see how they act on their toes. Do they show up on time? Do they take notes? Do they follow up? And probably the worst way to get information is the resume. And so start with the first. If you can't do the first, do the second, and then go down. I'd say that's probably the best way to vet someone. And in terms of where you find those people, by far the best way is references. And so, you may tell your team, tell me who we should talk to, and you'll get a couple of names. But I think really sitting down one-on-one and saying, I want you to list out the 30 most talented people from high school, from college, from each one of your jobs on your resume, and then taking notes is actually probably the best way to get those names. And you'll get way more names and in general have way more success, I think, if you do it that way.
There's some great advices. Thank you for that. Anil or Bernardo, do you have any more comments about this?
Yeah, I would say we kind of try to do something similar when we meet teams. And, we basically, and I apologize to Bernardo and Jonah if I did this to you guys, but basically just try to spend time with people, and over time you just go off pattern recognition of knowing phenomenal people for decades that have built incredible companies. You just match that to new founders that you look at. And so I spoke to the 5 things that I look for, but the best founders that I've ever seen, they're insanely responsive. They don't really have other hobbies. They're not thinking about work-life balance. They're just 24/7 obsessed with building something great. They're insanely thoughtful. They know the competitive landscape. They know the ins and outs of what they're building. They typically have they have a vision of what the future looks like. So they're not just smart, but they're creative as well, and they kind of have a vision of where the market's heading. They tend to have a history of excellence in whatever they've done. So even if they started out as the paper boy, they innovated on how to be the best paper boy in the world, and they found they can speak very thoughtfully about the route that they took. And so same with me. It's trying to kind of cheat and find a way to get people to spend time before investing. And often I'll just get people by text and we just start chatting, and you can learn a lot about someone based on how you interact. And so I think 6 years in now investing, we're trusting our gut, and we believe that our gut is actually right, and that if we vibe, if we vibe well with someone, and the time that we spend with them, that there's a good chance that they're phenomenal, and that there's also then a good chance that they'll do something phenomenal.
Thank you for that. Anil, Jonah, Bernardo, thank you so much for sharing your stories, your advices in this first E-Misión this afternoon. Have a great evening.
Thank you guys so much. Appreciate it.
Thank you.
Thank you. We will take a quick break, and we'll join again at 6 o'clock to have a conversation with Sabir Bhatia, which is the co-founder of Hotmail. So see you then. Good afternoon and welcome to the second half of today's session of the first E-Misión Silicon Valley, organized by the International Commission of the Chilean Construction Chamber. On the first half of today's session, we were talking about venture capital here with Carlos Vascu. And one of the big lessons was that you actually have to think big. And to talk about that, we today have the pleasure of one of the companies who thought big from the beginning. We're talking about Hotmail. And today we'll be joined by Sabir Bhatia, one of the founders of Hotmail. Sabir, thank you so much for joining us today.
You're very welcome. Thank you. Excellent. So should I start?
Yes, please.
Okay, wonderful. Listen, gentlemen and ladies, thank you so much. It's quite an honor for me to present to you. I'm going to give you an idea of what goes on in an entrepreneur's mind when an entrepreneur thinks of starting companies. And probably half of Silicon Valley is walking around with an idea in their heads. And a small percentage of these ideas make it really big and go on and change the world. But the vast majority of them, don't make it. That doesn't mean that people shouldn't try. But a little bit that to describe to you what goes on from the time an idea is created to the time that it actually becomes a company, and then of course how do you grow the company. The really good thing about Silicon Valley is that there is an ecosystem that exists to support these out-of-box ideas. And some of them can be extremely crazy, but that's okay. It's okay to be to dream of the future even before the future occurs. So I'll just take you through, the process of converting an idea into a real company, and give you a little bit of idea of my experience of what I did. First of all, Hotmail is a very old story. It's 20 years old now, and what I'm working on now, and how I think of ideas. And of course, there are good ideas, there are bad ideas, but the ones that really stand the test of time, are the ones that truly challenge status quo. So that's why, the first slide, as you can see in my presentation, is about thinking different. While there is entrepreneurship that goes on in all walks of life, even when people open a restaurant, that's an entrepreneur puts something, an idea or a vision that's in a person's mind, and puts it to reality. Maybe it is, they want to, have other people experience their culture, for example, and that's why, they go ahead and open a restaurant from their native country, be it an Indian restaurant or an entrepreneurial, or like a Peruvian restaurant, or whatever the case may be. But in the case of high-tech entrepreneurship, the entire goal is, can you mute yourself, please, if I can request you? I don't know, there's a sound coming from somewhere. High-tech entrepreneurship is very different from traditional entrepreneurship. Traditional entrepreneurship is all about dollars and cents. You put in so much investment, and then it takes so much time period for your investment to mature, and then it becomes, cash flow business. And over time, it becomes that much profitable, so the goal of traditional entrepreneurs is to make companies profitable, and to estimate what kind of time frame it will take for the investment to kind of recover itself. But high-tech entrepreneurship is very different. First of all, at the heart of high-tech entrepreneurship, the hardest thing for entrepreneurs to do is to find a fundamental problem to solve. I'll give you the example of Hotmail, which really the whole idea was two people, Jack Smith and myself. We were both employed at a company called Firepower Systems, and the company put a corporate firewall around the corporate intranet, which prevented us from accessing our personal email accounts. His was at AOL and I had one at Stanford, and we couldn't access our personal email accounts. So the simple idea for the creation of Hotmail was, what if we made email available on the web? It would solve that problem of ours. And lo and behold, that was the whole genesis of the idea. And literally we went around Silicon Valley knocking on venture capitalist doors. One decided to take a risk and bet on us because it was a crazy enough idea. And in a short time span of 1 year, we got 10 million subscribers. I mean, that's the beauty of high-tech entrepreneurship. You find an instant audience. And today I can say that the audience is not just in the tens of millions. The audience is in the billions. There are, close to 6 or 7 billion connected smartphones, internet capable. And that's the opportunity, that if you have even an idea, and if you can execute on it and get the right kind of group of people around to build the product first, test the idea out, you get an instant audience of billions. And whether it is Google or it was Hotmail or Yahoo in my time, and now of course the likes of Uber and Instacart and Postmates and others, the last thing that an entrepreneur thinks of on day one to convert an idea into an actual company is making money. The general philosophy in Silicon Valley is, if there is an idea that's good enough, a lot of people will use the product, and once they start using it, that is success to an entrepreneur. Making money is, we'll figure it out. Whether it's premium models. I mean, think of WhatsApp. WhatsApp is still not making any money, but because they sold to Facebook, its worth is about 200 billion or so. And so most successful companies in the last 20 years, whether it's Facebook, Google, Netflix, Amazon, Uber, Instacart, created new categories that just did not exist, but they solved a fundamental problem. And today, that is the power of technology, that there are so many people that the technology is so standard. I mean, even if you look at smartphones, there are only two kinds of smartphone, Android and an iPhone, iOS, that it is an incredible opportunity for entrepreneurs to create new products. But of course, the flip side, like I said, is there are billions of apps that are created. So just because you create an app does not mean that you will solve a problem and become rich and become famous. You've got to be solving some other fundamental problem at the heart of this all. So that was the different slide. Second is, this is high-tech entrepreneurship as opposed to traditional entrepreneurship is not for the faint of heart. Every VC that starts out knows that 19 out of 20 investments are going to fail, but that's okay. It's okay. The one that makes it, and as you go through the funnel of entrepreneurship from the bottom to the top, you find that companies at the bottom, VCs take big risks, like they invest in 100, 200 companies. I'll give you an example of a fund called Angel Investors that I had invested in the 1999-2000 timeframe. And this gentleman invested in 150 companies. Now, when the 2002 bust came about, he was writing letters to all the investors and saying, you know what, I'm so sorry, most of the companies are failing, they have failed. I'm not sure if I'll be able to even return your money to you. This is, very tough times, there's a downturn. So he was kind of just spraying and praying and putting a small sum in literally in every company that he would touch. Now, luckily for him, he invested in one company called Google. And not only did he, return all of the money, the fund itself became 5 or 6 times the value of the fund. It was a small fund, $20-30 million fund. So that was his spray and pray kind of strategy. Of course, most VCs are somewhere between the true spray and pray strategy and let's build the VC firm around a thesis. Let's invest in this sector, or this is something we will get expertise on. And then they hire the right kind of people and they ask the right kind of questions and find a group of companies, and they kind of are getting towards the truth that more or less, this is what the market really wants. And from an entrepreneur's point of view, the hardest thing is that the individual has to be able to kind of predict the future even before it occurs and build products even before world citizens know that they need it. And the person who's personified this visionary aspect is really Steve Jobs. He built the iPhone even before people knew what he was building, and deep down he knew he was going to build a product that the whole world would want. And paying attention to all the elements from the littlest point of design, finesse, ease of use, the UI, all of those things. And that is why you see the iPhone or Apple is today the most valuable company on the planet. But that's the whole thing about lesser entrepreneurs also have to have that kind of ability to predict the future. And I mean, look at Jeff Bezos of Amazon too. I mean, all he predicted is one day people would be buying online, and that was the big vision. But in order to make that vision a success, I mean, he won a lot of smaller battles along the way, and kind of consolidated the world's products under one umbrella. And then, of course, while doing that, he also discovered and built this entire cloud business. But the whole idea was not, you build a business after you find a market where you think the world can use the product that you build. You don't really build it with the vision of actually making money on day one. And that's why Amazon didn't make money for 16 years, and of course today is also one of the most highly valued companies on the planet. So the real goal, I mean, if you really distill it down to one of two things, there are entrepreneurs who want to do this because they want to make money, become famous, become rich, or there are entrepreneurs that want to change the world. In my humble experience, the ones that work tirelessly to change the world, become far more successful. I'm not saying that making money is a bad thing, but at the same time, if that is your only primary goal, maybe places like Silicon Valley are not for you. And for a company to succeed, every single individual in the company has to believe in the larger vision. And that is why they make use of limited resources to do great things. And only then companies truly succeed. So now I'm going to talk about the non-business side of entrepreneurship. What goes through the minds of an entrepreneur. And after thinking about this and philosophizing about this over the last 20 plus years, I think that at the heart of an entrepreneur's journey, you have to have really three things. You have to have humility, you have to work extremely hard, and you have to be extremely honest. And in terms of honesty, it's not just the financial honesty, but you've got to be intellectually honest as well. If a product that you have built is not working, you have to be big enough to say, maybe there is something wrong with this product. Maybe I'm not pursuing the right market. Whatever dog food I have created, maybe the dogs are not eating it. And I think these are the three things that an entrepreneur needs and for a company to be successful. And then, of course, your idea and your vision will be challenged multiple times. 99 out of 100 people will tell you that this is not a good idea. And it's not a bad thing. It's as long as you are true to yourself and you can address the concerns, of the person who is questioning your idea, and satisfying yourself that you have honestly answered those questions. It's a good thing if 99 tell you that it's this is not going to succeed. And so the crazier the idea, the greater the chance that it may just succeed. And every rejection should make the entrepreneur stronger, not wear him down. And that's how the best ideas and the best entrepreneurs really succeed. And like I said this in the beginning, the hardest problem in entrepreneurship is to find the right problem to solve. And usually if you try to copy what has been done elsewhere and try to replicate it, which is like the China model, Chinese companies, if Facebook came out, they create a Facebook of their own. If WhatsApp came out, they create WeChat. It's good. It works only in local markets. But if you want to truly, become part of internet history, the hardest thing is to find the right problem to solve. And what do I mean by what problem it is that one has to find to solve? That means making something faster, making something cheaper, or just creating a new way of thinking about the world. You know, classic example is Uber. I mean, it's like, yeah, I'm trying to catch a cab, and I have a smartphone, but I can't hail a cab. What if somebody could just give me a ride? I'd pay him $20 to give me a ride. That was the genesis of Uber. And that simple idea became a 60, $70 billion company. And, once, of course, you have an idea, then you have to ask yourself, how big is the market? Am I the right person to address this? Can I assemble the right team to deliver this? And really at the heart is, what does my gut tell me? Can I solve this problem? Am I on to something big? Or am I just fooling myself and, drinking my own Kool-Aid, as they say in Silicon Valley? And, really that's the crux of entrepreneurship. And people come up with very complex ways of doing things. They imagine the world will be this way or that way. And but really, to be honest with you, from my experience, right from the time of Google to most recently the big companies, Snowflake, that just went public, the greatest ideas are the simplest. You've got to hide the complexity for the end user. You've got to, at the heart, figure out a simple yet elegant way of doing things. And that has resulted in the brand names that you see on your screen today, whether it's Google, Uber, Tesla, Apple, Netflix, Amazon. And that comes from the culture that makes this place so amazing. And that is all I had for you today. And I'm happy to answer any questions you might have. And thank you once again for being a patient audience.
Letting us get inside a successful entrepreneurial mind. Savir, you sold Hotmail in '97, I want to say. How do you realize that it was a good moment to sell it?
Oh, it was 1997, but the real thing was very simple. The choice was either partner with the largest software company in the world or compete against them. And we were a smaller company then, and we did not have a proven revenue model. So the best thing really was to sell to Microsoft. Nobody knows what the future is because, we were the first to do this. Had we kept Hotmail and somehow been able to fund it for the next 5 or 10 years, today, of course, close to 1 billion users of anything is worth 40, 50 billion. So the numbers have changed since then. And today, the world, it's very well established. If you have a user just on the internet or on the mobile device, it's the worth of a user is about $40. If you know something about the user, you've got data like a Facebook or something, then the worth is anywhere from $200 to $500. And then the lifetime value of, if you get even more detailed, a lot about the users, like Amazon knows my buying habits, knows what I do. It's just off the charts. So at that time, we didn't know the future. And so it was a good deal at that point in time.
Yeah, it was. So we have a question from Jose Carlos Oyersun. Because you talked a lot about the struggles that you have to deal with when you're an entrepreneur. How do you keep going? What should you think or what should you do to not let the idea or your company die?
One way is, have a great family life. You got kids, you got a dog. If you're happy in your other life, then, these struggles occur in every entrepreneur's life. You've got to distract yourself with things that make you happy. Besides just work, a sporting activity, whether you like to play golf or tennis or go bicycling. But really, family is what, is the reason we're all individuals. And family life keeps you going. So that part is equally important. People just focus on, well, I kept my things. Yeah, I mean, every entrepreneur, every individual, every business person will, and this wonderful panel will tell you, faces the stress of life. But you've got to distract yourself, and you've got to figure out why are you alive. It's not just for work. Work is one part of it, but family is what should keep you going.
That's a great advice. So one of the big struggles when a company is growing is when a founder becomes the CEO, and there's always a struggle to when he has to, take a walk, or take a step back and let another person be the CEO. What do you think someone should think, or what strategy should you follow to make that decision at the right point?
Well, one of my slides, I did mention one should have zero ego, which means the first thing that I said, even during the Hotmail time, was I told the investors, if you can find a better CEO to run this company, please go ahead and find one. So you've got to have that humility that you're not the best. You're just an entrepreneur. You are just getting the right group of people around you. If it is all about you, that's a recipe for disaster. So maybe different entrepreneurs think differently. In my case, I'd be the first to say somebody else just run this show if you can do it better. And if other people, if a board or a set of investors think that somebody else can run it better, by all means, just go do it. And that's the way of thinking. You have to realize that you're never the smartest person. You've got to hire people smarter than yourself and give them the credit and the ability to deliver. So support them. You're really a supporter in chief in a way. And this is true of even small companies or large companies as well. And your goals should be to do the right thing as opposed to making it about ego. And that's the beauty. The most successful individuals will tell you that they have very low ego.
Sabir, well, first of all, a pleasure and honor to be talking and hearing your story. You are a real visionary person. You founded Hotmail. When you mentioned on one of your slides, it's probably your inspiration, make a better place or a better world. If you look at, or if you try to look into the future from now on to 2020, and all of this discussion about the how young people are deep into social medias or internet and losing human contacts, is any dilemma for you thinking of a better world into the future? What's your vision on this social dilemma, if you agree with that social dilemma?
No, I listen, on the one side, I think it's a big disaster for humanity. I have 3 little kids and they are addicted to screens, whether it's the television, it's the iPad, or it's a small phone. This is not normal behavior that I grew up in. We grew up playing outside and, engaging with nature, doing things. We didn't have distractions of this. I go to restaurants now and I see a family of 4 and all 4 are on a smartphone. And what's the point? So yes, there is kind of an erosion of the social fabric that is occurring because of the internet and the proliferation of technology. But at the same time, on the other hand, a part of my brain is saying, okay, what's next? How can I imagine something even better? And we're all slaves of technology. I don't have the power to change it. It's taken a life of its own. So I see your moral dilemma on the one hand, but at the same time, technology is what is also bringing the world together. Look at us. I mean, you guys, many of you are in Chile and different parts of the world. And here I'm in, California and Silicon Valley, and we're communicating. So there are two sides. There is always and I don't have enough experience to know that what the kids are growing up in is necessarily bad, but it's surely different from the way I grew up. And that's all I can say at this point.
Ignacio Troncoso wanted to ask a question as well. Ignacio?
Samir, first of all, congratulations. A very interesting story. And I love your example of a good family life. I totally agree with that. Question is, let me say that you mentioned two things that sounds contradictory, and I would like you to elaborate on that. One is that a lot of entrepreneurs fail. A lot of ideas don't go ahead and they stop, which is not bad, you said, and I agree. There's at some point you have to recognize that you are going in a path that is not right. But at the same time afterwards, you say if for every rejection you feel stronger and you should continue ahead. How do you balance that? When do you know that you should stop or maybe change the way, or when do you say, no, I am right and everybody's wrong?
Very good question. So this ultimately comes down to what is the truth? And is the truth my belief, or is the truth the market? And the best way to resolve this question is to really test your idea with the market. So set some parameters for yourself for success or failure. If I create this, if I'm creating a product, if every time I go to a customer, the customer says, wow, we need that, then the market is telling you it's a good product. If the customer is questioning your idea, and I'll tell you from my own experience, I have failed. I started an IoT company for believing the data that existed all over the planet, that there are going to be 200 billion IoT connected devices in the next 3-4 years. And we built a phenomenal IoT product that took us years to build. That had all the sensors in it. You could remotely manage buildings and do all these creative, fantastic things with it. The customers are from your industry, construction and real estate, they didn't understand, wait a minute, this is too high tech. This is not familiar ground. So the market is not ready. Maybe the market will take another 10 years to become ready. They are stuck with the old ways of doing things. And so that was a good idea, I thought, but it was at the wrong time. So timing is also critical for an idea to succeed. And I've seen this occur on the internet. I have seen companies, there was a company called XDrive. Simple idea was to store your documents online. Started in 1999, raised 25 million, went out of business. 6-7 years later, Box.com and Dropbox, same idea with a little bit of a twist, wildly successful. How come? Because in 6 or 7 years, the internet connections became so much faster. Plus, you needed to access documents on your mobile devices, and they integrated it with your desktop so that you can drag and drop files and automatically sync up. Just small variations in the right timing, boom, $20 billion company. So timing is important. You may have an idea, but if the market is not ready, you will not succeed. Maybe in 10 years' time, the same IoT company with a phenomenal suite of products that can enable you to remotely manage a building will be superbly successful. So, of course, that idea has been shelved and not abandoned, but put on this thing. But I moved on to something different. But So the answer to your question is the market will tell you. The ultimate judge is the market, not you, not your friends, not your investors. Ask 10 potential customers or 100 potential customers or 1,000 potential customers, and you'll have your answer.
Thank you. And we have another question from Juan Carlos Leon. Should an entrepreneur predict the future or create it?
Nobody can create the future, only God can. So the best thing we can do is try to predict it and try to see where it is going and use instinct and things to imagine what the future is. There's no way anyone can create the future. So hopefully that's a simple answer.
Yeah. And we have another one. What successful startup has really surprised you in the last few years? Something that you really didn't think would work?
TikTok. My 8-year-old daughter is making videos. I'm like, what the hell? I mean, where did this company come from? From nothing to, being superbly valuable, but because they've captured the 8-year-olds to 32-year-olds and everybody's on TikTok, addicted. So hopefully that's an easy answer too.
Yeah.
Xavier, I would like to ask you, I don't know, how are you spending your time today? What are you doing? And if you have any interaction with the construction or real estate in your life regarding we are talking
the last company was all real estate and construction. It's an IoT product that can enable you to remotely manage your whole building from the get-go. But that's on, it's shelved a little bit till the market recovers and real estate recovers and people get back into construction and realize that, hey, listen, there is a real advantage to being able to remotely control everything. So we're not there quite yet, but right now I'm working on an idea kind of related to TikTok. So you'll see it come out literally in the next 4 or 5 weeks. And we'll see if it succeeds, it succeeds. But in the first 2-3 months, I will know if it's going to succeed or not.
Did the pandemic help you create this, or was it an idea before that?
No, it was during the pandemic. It was during the pandemic. It was just the timing of this I can't believe that it has not been done. So hopefully in 5 weeks, I will let you know and have you all be beta testers of the idea.
Please let us know about that. Do you think that the pandemic has helped entrepreneurs create new products? Have you seen new ideas?
Absolutely. Listen, the pandemic has created, an explosion in the use of technology, virtualization of who we are, and this event otherwise would have occurred maybe in person, at a hotel or whatever, with a few people listening to what I have to say. But today, everything is conducted virtually on Zoom. So I think that's what the pandemic has done. So there are a lot of ideas based on virtualization of our persona that have become quite successful, whether it is use of avatars in place of actual faces, using filters of different types, or it is better quality, video technology and video hosting, or just change in our lives, in our day-to-day lives. Today, we're staying at home mostly, ordering stuff online. I have seen ideas related to our change in lifestyles that have launched new companies and new products.
Going back to one of your slides, you mentioned the visionary is a single person who creates a company or idea, and the team comes after that. You also mentioned the zero ego, or the ability to trespass this to a better person or to a better manager? Or two questions on this. Do you believe that there can be a collaborative or a multiple entrepreneur system entrepreneur?
Yeah.
Or
So
kind of
when I say one single visionary, I mean a small team, 2-3 people who start a company. Sometimes just 2 or 3 get together and they ideate and figure out so the co-founders, I should say, the initial core team, help perfect the idea. But usually it occurs in one individual's head, and then of course the individual shares that with somebody, and then back and forth, and it leads to a better idea. But the collaborative effort is absolutely important. It's the individual cannot do everything. You can just keep thinking of new ideas and new ways of doing things. The implementation, you've got to have the right team to do. And so you've got to hire the right kind of people. But it's more important to hire people who believe in what you're doing than people who are exceptional at the work that they do. And of course, a combination of the two would be phenomenal. But oftentimes, the belief in the idea, enables them to deliver beyond, what they're capable of. It's the same reason why, athletes perform their best in competition, because when they're surrounded by people as good as they are, they just, work that much harder. And the same thing occurs in a startup as well. Startups usually have limited resources. So the few people who are working on it, do 10 things at the same time, which in a normal company would be broken into multiple tasks.
We also have a question from Felipe Gonzalez. Felipe.
Well, Said, thank you so much. It's a pleasure meeting you. I used to be a Hotmail user for the past 20 years so far. So thank you so much. It was like my first approach to the internet. And do you remember what was like that tipping point or the shift that you thought and you said with your team and the visionaries that, okay, I changed the system and how people communicate?
Oh, with Hotmail, we knew from day one, from the time that the first email account was created with Jack Smith and me and the third employee that we did have, the 3 email accounts that we had. When I was using it, I knew one day the whole world would be using it. I mean, it's just instinct, right? Even before the market. And that way I was very fortunate that it was such a simple idea, and yet it was, but instinct told me that one day everyone would use it. And so the tipping point was really the first 8 weeks. Now that I look back, when every single day we had growth in our user base, that is a phenomenal experience. That one day it's going to be a massive company but of course there was no revenue. We didn't have advertising as a model yet fully flushed out. And in fact, there's still no advertising on email, but it's just necessary. I mean, and the thing that people would need to have their personal email accounts different from their work or different from, what their internet providers were providing them, seemed like a natural way. And it just, so there wasn't a kind of a tipping point as such. It was just after the first product was created, I knew instinctively that this was going to be big.
You talked about instinct, Sabir, but do you think that some of that instinct can be created, not artificially, but through hard work?
Hard work is important, but hard work is separate from instinct. I think that instinct you can get from experience, not so much from hard work as much from experience. Mm-hmm. So when you look around and you're constantly thinking about things and seeing what companies are succeeding and why they are succeeding. Like I will tell you, when one of the drawbacks that I felt in the early days of Google was like, this is great. It's an amazing product. I mean, you type something and you get a response back. How are they going to make money? They hadn't figured out. For the first 6 years, they had not figured out how they were going to make money, because I knew the professor who had funded the two Google guys, and he said, we are trying to make Google for work, to enable companies to have internal search, and we'll sell the internal search product to them. And I'm like, yeah, that's good, but it's a slow growth kind of mechanism. How about the actual listing? And boy, when they figured out that without putting banner ads, they would just put links and, do kind of, goto.com was the company that taught them how to do that. It's just, from then on, they just took off. I mean, like I said, it's over, $1 trillion company. That's the beauty of the internet. You've got a good idea. The sky is the limit. Literally, you can be $1 trillion company if the idea is good enough and your instincts tell you that this can go someplace.
So you already mentioned, and going back to the construction or your house, or how you live, or how your day life on a city, and going back to your history, you invented Hotmail to solve a problem. Can you tell us any problems you see in your day life at home, or things as a user, as a client, or any ideas you thought or think and societies have to solve as how we live in our home or on our cities?
First of all, I don't know if this problem is temporary or permanent. We still don't know if this coronavirus thing is going to last another 6 months, a year, until end of next year, or is it going to be with us for the rest of our lives, where we have to wear masks and shields all the time? So I'm not prepared to make an instinctive prediction based on what has occurred in the last 6, 7, 8 months, because I don't know. I really don't know, like everybody else, how serious this problem is. And I'm hoping that this lifestyle is temporary. But, there are some aspects of it which will remain past the pandemic. One of those is obviously like the ease of doing online shopping. Why would anybody go to a store anymore other than, to really experience a mall? I mean, like the loss of, and that's the downside of too much of technology. Like for my kids, they can't go to Toys R Us anymore. I mean, that was their happy place. They looked forward to going to, it was an experience. And they may never have that experience ever again, because everything is online. So it makes it very, uninteresting that everything is virtual. I mean, what will we become? Virtual beings just interacting with each other on screens, whether it's the phone or it's a computer screen or it's an iPad, and that's it, that's our life. Or will we, go past this pandemic and hopefully discover the things that make us human, which is interaction with each other, getting together. And, the world was, before the pandemic, was headed in the right direction, in that I think people had figured out that life is a set of experiences. And that's why people were paying for, I want to experience, living in somebody else's home, like Airbnb. Even though I can never buy that home, I may experience that for a week or so, or a few days. Or I want to go to concerts, and that's why people were moving away from just consuming music online, to saying, let's the most important thing is for me to experience being at a concert. But with this pandemic, we are moving away from that, and I think that's a very sad thing for humanity. Hopefully we'll come out of it once we conquer this this virus, you know, the world's thinkers are thinking about this, and hopefully we'll come out of it.
We hope to conquer it soon. And one of the last questions is about how can we contact you if we have an idea that we wanted to talk about with you?
Simplest way is to send me an email, sabir@hotmail.com, you know, or you can get in touch with Matthias and he will contact me. And, you know, I think that's the best way.
Sabir, thank you for your lessons, for your history, and for joining us here in the first E-Mission Silicon Valley. Have a nice evening.
Thank you. You too. All right. Take care. Bye-bye.
Bye.
Bye. Thank you.
Thank you, Samir. Very good.
Yeah. Thank you. Thank you, Ignacio. Bye-bye.
Bye.
Samir doesn't have a Hotmail.
I also wanted to thank you, Carlos, for joining us today, and everybody who watched this session here at the Chilean Construction Chamber. A quick survey will appear on your screens. We ask you to complete it to let us know what you thought about this session. And we'll see each other tomorrow at 1 o'clock to talk about a best-selling book about transformation. So see you then.